Hey, David Ellington here. Going over a few of the basic topics that we talk about quite a bit here at Pinnacle 4 Financial Advisors. And the one I'm going to talk about today is charitable remainder trusts. A lot of times people not really understand what charitable remainder trusts are. And what it is, that people call it a CRT. It's a trust that you actually put assets into that are going to go to a charity after you and your spouse have passed away. So for instance, let's say that I have a large real estate portfolio of long-term rentals, or I might have an apartment complex or a piece of land or a commercial building. I can actually put it into the charitable remainder trust, especially if these are low cost basis assets. I put it into the charitable trust. It's eventually going to charities after my wife and I both die. But right now, when I put it in that trust, I've got the ability to sell it and not pay any capital gains tax. Then I can actually reinvest these dollars into investments that will create income for my wife and I. So I can actually set this up as a certain percentage amount, or I can say a certain income amount that I want to actually be paid out of this trust. And the nice thing about this is that what we typically do is that, let's just say I've got an asset worth $1 million, or if I've got 5 properties worth $1 million, and I want to sell them, but I'm concerned about the charitable remainder. Concerned about the tax. What I do is we actually do the calculation, find out how much of the assets need to go into the trust, because I'm giving away to charity in the future, I get a present value tax deduction, charitable tax deduction for what goes into the trust this year. And so of the $1 million, I might be able to keep out $200,000 or $250,000 worth of assets in my name, because the charitable deduction that I get will be large enough to offset the tax on the $200,000 to $250,000 I kept out in my name. So I end up with $1 million asset. I'm able to sell the whole $1 million. I'm able to keep about $200,000 in my name. The other $800,000 would be in the trust, creating income for me. Let's just say it's 6%. And then what I usually would have folks do is we take about 1% of the income and we use it to purchase a second to die life insurance policy on the husband and wife. And we buy that in a separate trust called an irrevocable life insurance trust. And that ILIT is set up because then it's totally outside of your estate. It's not included in your estate. It's not probated. There's no local or federal or IRS taxes on that trust as well, because life insurance is not taxable as long as it's out of your name. So this ILIT now is for $1 million. It's a life insurance policy that after you and your wife both pass away, $1 million goes to whoever you want it to go to. Could be your children, or if you don't like them very much, it could go to friends or family. It can go to whoever you want to benefit. So we have $1 million asset that was going to get killed with capital gains tax. Now all of a sudden we're giving $1 million away to charities of your choosing. Any charity. Could be a church, could be a local community, it could be a national organization, whoever you want this to go to. So the $1 million goes to charity. $1 million from the ILIT after you both pass away goes to your heirs or children tax-free, and you receive income off that for your entire lifetime without ever having to pay any capital gains tax. It is a great way not only to diversify, but benefit the charities as well as your heirs. So consider using this charitable remainder trust concept when looking to sell assets that you're tired of having to 1031 exchange them into another piece of property. You're ready to get out of maybe the management business of owning real estate. And this is a great way to do that. So if you have any questions, always email me, david@pinnacle4.com. Would love to hear your questions and meet with you and discuss this if you have any actual concerns or needs, or want to go ahead and try to set this up and meet with an attorney. I'm more than happy to meet with your lawyer and discuss this further. Hope you have a great day.